Okay, now we're going to talk about Chapter 7, the bank reconciliation. So bank reconciliation is a really important part of our internal controls because it makes sure that our cash, according to our records, matches our cash according to our bank. Now, when I say that, I don't mean they should, my bank statement should match up exactly with what my trial balance says. As a matter of fact, that's the entire purpose of bank reconciliation. Generally speaking, it won't. Okay, generally speaking, our bank statement amount will not match due to a lot of different reasons. Biggest ones are things are recorded on my books before they necessarily go to the bank. For example, if I write a check, I know a lot of us don't write checks anymore, but if I do, I write a check and I mail it. I have recorded that in my books. I've recorded that on my accounting records, but the bank doesn't know that it's been written. They have no way of knowing it's been written until it actually gets cleared through the bank. So what we will have is what we call reconciling items. And reconciling items, easiest way to kind of think of those or frame them in your mind, at least for me, is to think about them as far as who knows about it. Does the books, meaning the company, know about it, or does the bank know about it? Those are the two options, the books, the company records, or the bank records. And who knows about it and has it recorded, which means I can figure out who doesn't. And then does it increase or decrease the balance? That's my step 2. My step 1, where is it already recorded when you record it to the other side to reconcile? Step 2, does it increase or decrease the balance, and by how much? So I'm going to go through the book example, and they have an actual illustrated bank statement in Exhibit 9 on page 348 that you can look at, and they kind of go through step by step as far as what items there can be on each side. But I think if a kind of simplified version is to go through this process, like I said, just asking yourself these 3 questions. But the place I have to start is I have to set this up. So I have 2 sections of this. I have according to the bank statement, so this would be I would call this the bank side, okay? And I would call this section down here the company side. Now, when all is said and done, my adjusted balance, my total adjusted balance, which would be here, and because I got rid of this, I can't see where they put it. I assume it's probably because I changed the color scheme, should be probably there. These 2 numbers should match, okay? Or what we really are doing is reconciling these numbers. So reconcile to the books, and my adjusted balance should reconcile to the bank. So we're going to have items that change or adjust this. Starting out, first thing we're going to do is we're going to put our balances according to our records. I don't have any functions written in here. So we have our balance according to our records and our balance according to our bank, so we can get our starting point for our bank side and our company side. So we go and look at the bank statement, and the bank statement shows a balance of $30,359.78. Okay, so that's my balance according to bank. All right. When I go look at my company records, I would not expect them to match. But my company records, the ledger, says on that same day, July 31st in this case, that my balance is 2549.99. So you can see right now they do not match. So we're going to find our reconciling items plus additions and subtractions, and then we're going to reconcile them together. We'll also write a journal entry after we're done with that too. So first thing we look for when we're looking at the bank side or the company side, either one, is we start going through the checks and we look and see if there's any outstanding checks. Now an outstanding check, just because I know we don't write very many checks, an outstanding check is a check that has been written by the company but not yet cleared the bank. So that is an outstanding check. So what that means is that the company has already put that amount into the company records. When they wrote the check, they recorded it, they put it in their ledger, and they showed that they paid that money. So that amount is already taken out of this 2549, but it is not taken out of the bank yet. So I'm going to go ahead and put my outstanding check, and I have 3 of them, and these are listed in the book on page 352. Outstanding check 812, outstanding check 878, and outstanding check 883. And it gives me the amounts 1,061, 435, 39, and 4860. Now, technically, these all should be negative numbers because these are checks that I wrote, which means I'm paying somebody else for them. So it's money that's going to come out of the bank eventually. And it has already been taken out of this. So where was it already recorded? Well, it was already recorded in the company record, so I need to adjust the bank records. Does it increase or decrease the balance? Well, they're checks that we wrote, so it decreases the balance. And the amount of the correction is the amount the checks are actually written for in this case. So there's my steps 1, 2, and 3 for the outstanding checks. I also have, it says, a deposit. It says on July 31st, we had deposited $816, but it was not yet on the bank statement. So again, my company records would already have it in it. So where's it already recorded? It's already recorded in the company records. So I need to record it in the bank records. And so record the bank records to reconcile. Does it increase or decrease the balance? They deposit. I put money in, so it increases the balance. So I have an outstanding deposit. And this is a positive number because it's a deposit for $816.20. So now I can total up my adjustments. Put it here. For a total of reducing it by $728.79. I can take my bank balance plus my adjustment balance, or my adjustments in total, and get my reconciling balance to $2,630.99. I still don't, I need that number. This number should eventually be down here, but now I got to look through more items to reconcile. So the next thing it says that we had a note receivable of $400 plus $8 in interest collected by the bank, not recorded in the journals, as indicated by credit memo 408. So this is something that has been recorded by the bank already. So who already recorded the bank? When you record on the other side to reconcile, does it increase or decrease the balance? Well, we received, it's a note receivable, so it's money that we received. So note receivable collected by the bank goes on this side, and it would be an increase because it's money that we are getting paid, note receivable, and the amount is $408. So we collected that from the bank. Then it goes on to say, a check from customer Thomas Ivy was returned for $300, returned by the bank as insufficient funds in SF, as indicated by debit memo. What this means is that this is a bounce check. You ever heard the phrase bounce check? A customer wrote us a check, we went to try and deposit it, and it bounced, which means the customer did not have the money in their account to cover the $300. Well, right now, because we didn't know this until we received the bank statement, we have that recorded like we received that money. So we didn't receive that money. So that means that this company side is $300 higher than what it should be. The ledger is $300 higher than it should be because we are showing that we received $300 from this customer, and in reality, since it bounced, we never actually got that money. So this would be, which side already has it recorded? The bank already has it recorded because they're the ones who bounced it. Does it increase or decrease the balance? It increases our balance, or sorry, excuse me, it decreases our balance because we have it included like we received it, and in fact, since it bounced, we never received it, so it decreases the balance. And by how much? Will it be $300? So an NSF check or check returned for $300. Let me make that negative. Okay. Next, it says there was a bank service charge not recorded in the journal for a debit memo of $18. So the bank charged us a service fee. We didn't know how much the service fee would be until the end of the month, so we waited and hadn't recorded it yet. So who's already had it recorded? The bank already has it recorded. Is it an increase or decrease? Does it decrease the balance? Bank service fee. $18 for a bank service fee. Last, it says, in addition, there was an error discovered, $9 error for check number 879. When check number 879 for $732.26 on account was recorded in the company's journal for $723. So for Taylor Company on account, it was recorded as 732. I'm sorry, it was recorded as 723. So it was recorded as 723.76, and it should have been 732.76. So I didn't record enough, right? My books right now, this 2549 has within it a check that was sent for $723, and sorry, it was sent for $732. We only recorded it for $723, so we did not record enough. So this number needs to be reduced by $9. So error and recording check, -$9. So now I can total my total adjustments. I think there's no more left that I know of. And I can take the 2549 plus this, and it should equal, if I've done this correctly, 2630.99. And it does. I reconcile between these two numbers, which are the two numbers I'm looking to reconcile in between. So my major steps are always looking for what happened, what site is it recorded on already, and how do I need to, which site needs to be adjusted and by how much. After that, I can write journal entries. So all of these items by definition on the bank statement side are things that I have already recorded but have not yet, but the bank has not yet seen, which means they are already part of my books, which means there's no need to journalize anything in the bank section. Okay, there shouldn't be a need to journalize anything in the bank section because by definition, as we defined earlier, all the stuff up here, all these adjustments up here are things I've already recorded in my books and that I have recorded in my books but the bank hasn't seen yet. By the same token, everything down here are items that I have not recorded in my books, but the bank has seen. So I need to journalize those to reconcile my bank balance to my records, my book balance. Excuse me. So first thing is I'll do the increases first. So I've got just one increase. Got notes. Actually, what I received was cash of $408. That's that note receivable. And then it separated out, and we should separate out the note receivable, the principal payment, versus the interest payments. Interest revenue. This goes a separate place on the financial statement. And this one has an extra line because I just copied and pasted this from somewhere else. So note receivable would go down by $400, and the interest revenue would go up by $8. And I balance, so I'm good to go. Now I can take care of, that's taking care of that. Now I can take care of all the reductions. So I have, first thing, accounts receivable. I need to put Thomas Ivy still owes me $300. Right now, my books show that he doesn't because he had paid me. But since the check bounced, that means that he does still owe me $300. So I'm putting that back in accounts receivable. That takes care of this NSF check. Next, bank service fee. That's just an expense. What kind of expense? You call it miscellaneous expense. You call it bank service fee expense. But it's an expense for sure because it's the money the bank charges me for using their services. So that, I need to increase the expense account by $18. And finally, my error in reporting a check, I need to adjust the accounts payable because what my accounts payable right now are showing that I owe Taylor Co. another $9 when I don't because the check was written for $732, but I had recorded it like it had been recorded for $723. And then I would reduce my cash by the total of those three. Those are my journal entries for the bank reconciliation. And the next video, we will talk about petty cash. And I was thinking about doing a bank rec separate problem. If you all wanted me to work a separate problem, send me an email or let me know. But for now, I'll move on for the next video to special purposes cash funds.